Welcome everyone to another Dividend video. Today we're actually taking a look at, I wouldn't say they're a different kind of company, but they're not on the FTSE 100 or the 250. They're actually on the AIM, the Alternative Investment Market, which is kind of a sub-market of the London Stock Exchange. It's meant to be designed for smaller companies, however you can still find the odd, a lot of recognisable names alongside a lot of growing companies, and eventually maybe some of these might actually end up joining the FTSE 250 and 100 into the future. So today's we want to look at is Supreme PLC, but that's where I know they're not in the 250, but when you start finding out what they do, they're actually a really giant company. So they're currently trading at 87 pence. And their dividend yield looks like there isn't one. They actually do have one. It's sitting at about 8%, but they've only been paying dividends in the last year. Last year they've been paying it. They've paid 2 dividends so far. Now, they did just debut in 2021, so they are new to the market. And that comes with a whole degree of risk, reward, opportunity, so many things. And whilst they started trading off at 178 pence, so £1.78, they reached an all-time peak of £2.44, and now they are trading at the lowest they've been at, which is 87 pence. Now, a lot of people can look at that and go, oh dear, glad I didn't touch that. Other people might look at that and go, is there an opportunity here? And that is what we're here to have a wee overview of. Now, currently a market cap of 101 million, PE ratio 7.66. Nothing out of the blue, and their earnings are increasing year on year. So let's jump right over to their website. We'll see who are they? Who are Supreme? Supreme Imports. They are Europe's leading manufacturer, brand owner and distributor of fast-moving stable products, aka they're really big battery distributors. Where do you see this? Where do you see what batteries they distribute? Let me see. There we go. They were formed in 1975 and they have sold over 300 million batteries from the likes of Energizer, JCB, Panasonic, Philips and Duracell. So they act as a sort of middleman to a lot of businesses, B&M, Sainsbury's. What they'll actually, you'll see in the next who they sort of supply for batteries. And they've been moving into several other industries. So this is definitely a company to have a wee look into, maybe put in the watch list. 290,000 bottles of e-liquid sold every day, 30% of the vaping market, and 130 million in revenue just at the end of this year. So, with orders being processed through their website at 29% and 56% of products from in-house UK manufactured products. So let's see who do they provide. Poundland, Pound Stretcher, The Range, Sainsbury's. Iceland, Nissan. I don't know if a lot of you know that's more of a... Well, at least I know it's very popular over here in Northern Ireland. Don't know how many there are in the mainland. I can't... Why is it not letting me pull these over? Tesco, Costco, Wholesale, Home Bargains, Heron Foods, Crosscutters, and a few others. Okay, it's not letting me... It's not playing ball with me in the video here, but you can see B&M and Asda as well. So clearly, they have some of the biggest names in UK retail in the midst of an oncoming recession as customers providing batteries. But they don't provide just batteries. Let's go over to their brands, see what else they've got. Let's see, leading vaping brands. So they have, what is that, 88 Vape. A lot of you may be familiar with that. I'm not too much of an expert in the vaping market. I think I've only ever had one or two flavours. I had an Oreos cookie one. Don't recommend vaping, no recommendation. Obviously, like any habit, but I have indulged, and some of the flavours were pretty nice, I must say. Exclusive lighting brands. They also work with JCB, Lumilife, Power Aster, Everready, and Energizer for a range of lightings. They have this is the one that is quite interesting to me. They've actually moved into sports nutrition and wellness, and lots of products that revolve around, obviously, the gym. Now, they did buy... Who did they buy over? Protein Dynamax and a few others. If we go over here to their history. There we go. Can we read? Now, history, I don't tend to dabble in this too much, but for the likes of Supreme, considering it's not a company a lot of us would know just off the face of it, it's not like I say Sainsbury's and you just instantly know who they are. We've got to have a wee look into the history. So, 1975, they were founded by G.S. Chadha Operating from a mobile van, he achieved annual sales of 250,000 selling toys and watches. They entered the battery market because they stumbled upon samples at a trade show. Operating a 3,000 square warehouse, they signed a distribution agreement with Panasonic and went to 2.2 million in sales. That was back in 1991, 7 years before I even appeared on this planet. The year I was born, they secured distribution agreements for Duracell, Everready, Energizer and Kodak, selling over 50 million batteries per year and expanding. Now, they reached the number one spot in 2001. To over 100 million batteries, so clearly they became one of the biggest players in that game, despite sharing their name with a fashion brand. I don't know which came first, the other Supreme or this Supreme. I don't think it matters all too much, but yes, they are SUP and the ticker symbol for the AIM market. Continued growth. We're jumping years here. Handing over the reins, he retired and it's purchased by his son. Okay, and then continued growth. They just keep selling batteries, extending their infrastructure. Fantastic. Diversified by integrating Lozeron PLC and Eurobatteries.com. There we go, to get a bigger share of the market that they're already a massive player in. Record sales in 2012 of 300 million batteries. Nice. Let's see. Launching Kick. What's Kick? Vaping market. So they were into that in 2013. 2015, 88 Vape was launched, which is obviously their sort of main flagship brand. Clean room facility for mix and bottle vaping liquids on site. There we go. So they really jumped into the vaping market at that stage. Reaching new heights, it was listed in the FT1000, the list of Europe's 1,000 fastest growing companies. That is when they went on in 2018 to acquire Shannon Protein product or technologies for 100 grand and a new venture into sports nutrition. Later on acquiring Protein Dynamics. So definitely as well as two other major white label contracts, Supreme wins the license to distribute sports nutrition products under the Pure Gym name. Pure Gym being one of the largest gym chains here. Yeah, I know there's quite a few over in Northern Ireland here. LED Hut joined Supreme. And let's see, more milestones were hit and they can't stop growing. And in 2021, that is when their successful IPO, which means they were then listed on the London Stock Exchange on the AIM market. Fantastic. In the 2021, the vape thing keeps on going across the globe and welcomes Vendec. Oh, so they acquired someone back in 2021 operating within Ireland. There you go, several brands. Okay, so that was a fair wee history lesson of Supreme. What was the purpose of that? The purpose is that so we can jump over to the About Us page. 41 countries supplied, 4,100 products in the catalogue and 3,300 accounts. Leading name in e-cigarettes and the UK's largest battery and lighting distributor. With over 20% of the battery market, which means 1 in 5 batteries in the UK are sold through Supreme imports to their customers. That's pretty impressive, I must say. Very impressive. And then growing in the vaping market. Plus, they've also got their sports nutrition. So they have at least 4 massive markets between lighting, battery, sport nutrition, and of course, vaping. All very fast growing markets, I must say. Well, at least 2 of them, vaping and sports nutrition, were very fast growing over the past few years. Now, we can jump into products. We were actually sitting in brands. We went through that. So what we're going to do is we're going to go over to their investor center. Do they have anything that's wee presentation? Gives us a wee presentation. Can barely speak today. Yeah, let's see. There's not too many, as I said. They've only been trading for over a year. Download. For the year ending, presents the team, them at a glance. So there we go. But I like graphics, anyone following the channel knows that I'm a sucker for good, well-designed graphics. So you can see all the information here regarding them. Pretty good. Let's see here. So there's their own brands. You can see them all sitting here. Quite good. They do the product development for bespoke packaging, marketing, do services, and then lots of business to business. They are a B2B business, which means they supply other businesses. They don't actually supply to the public. The public are supplied through their distribution channels from the likes of Spar, Home Bargains, Poundland, Iceland, Asda, Tesco's, etc. Amazon as well. Ooh, that is a very, very large amount. Bunzel. Bunzel in the middle of it. Nice. Always good to see one of the companies in the portfolio being supplied by someone else. Let's see, underline their CAGR growth, quite good. Here, everything's looking pretty nice here. Revenue up 33%, gross profit up. Everything seems to be looking quite good. Profit before tax dropped a wee bit, but here, sometimes revenue and gross profit doesn't always lead to an increase in profit before tax due to just a mixture of factors. We're going to go over to simply Wall Street. Now, using their snowflake evaluation here, we can see that they score fairly well. 5 out of 6 in value. The 2 out of 6 in future, so that seems to be the only one they're really failing at. Very good in past performance, financial health, great. And dividends not too bad. Trading at 72% below their fair value measurement. Now that is using a discounted cash flow model, just so you know as to how they get that. Earnings are forecast to grow 5% per year, and they grew 40% over the last year. Share price is very volatile. As I was saying, it was £2 just in January in there, and now we're at 86 pence. So for a lot of people, that might be a wee bit worrisome as to how fast they can change. If you had shares a year ago, they're down 55%. Does that mean they could increase into the future? Possibly. We're going to have a wee look here through it and see what all we can find. So, pay ratio, earnings to market cap, 7.3. Or, well, price to earnings ratio. Against competitors, I never really trust this because sometimes, especially with a smaller non-FTSE 100, 250 company, even at that, the competitors are never really super accurate from time to time. On Simply Wall Street, I love it in most respects, but that is definitely one that sort of misses the bar from time to time. Going down here, you can see that where it is 72% undervalued. They reckon it should be £3.16. Now, the company did almost achieve £2.50, so it's not too far away from that £3.16 mark at their height. Yeah, as you can see, just kind of collapsed for them over the past while. Future growth is looking, well, you know, the problem with growth in the next year to 2 years for any analyst is, you know, we're going into a bit of a recession, so you know people are tightening up their spending, and growth isn't going to be as gigantic as it was coming out of the pandemic, and it might slow down. But these are lots of factors that you have to consider when investing in any company. Obviously, none of this is financial advice. It's just me giving a wee bit of my perspective on it. Their past performance, scoring 6 out of 6, 15% annual growth. Let's see, back in 2018, 75 million in revenue, and they actually grew quite nicely over the pandemic, from strength to strength, maintaining a sort of 10% profit margin. Let's see, well, industry, and they were beating the market there consistently in growth, and the industry in the last year. There we go. Everything's looking up in this one. Down to financial health, I'm always interested to see here. About 50 million in assets, 25 million in short-term liabilities. Long-term, not that much in long-term assets, but not that much in long-term liabilities either. They seem to have quite a big debt to equity ratio up until recently, where they've kind of sorted themselves out, and that's looking quite good there. Debt's sitting there at 5.8 million, but between receivables, inventory, and a few other things, it is well covered. Nice to see. Okay, on to their dividend. Now, this is the black sheep, the unknown part, the grey area of this company. It's not been paying a dividend long enough for us to really know what's going on. At 8%, the reason it's an 8% dividend is because their stock price has simply collapsed. We had it maintained up at the £1.50 to £2 mark. This would probably be a lot lower. It would be a much lower number because they're beating the top of the market, the industry average, the forecast, and the bottom. So that makes them very interesting, I must say. Now, the analysts have collapsed their dividend per share and yield over the next couple of years. Is that being harsh? hard to tell. They don't have much of a track record. As you can see, their dividend yield was 1.3% at about 2 pence per share. Then it jumped to about 8 pence per share to give them a 8% dividend yield. And that wasn't even projected. That was actually a shock. Dividend Max will show you that no one really expected them to more or less triple their dividend per share, but they did. Now, here's where things get a little tough. Their cash flow their cash payout is at 98%, which means they only retain 2% of their cash flow. That, earnings retain's good, but their cash flow, it's not super well covered. I don't like companies that sort of set up at, a high percentage. I like a wee bit of cash flow retained for growing the business and doing a few other things with the money. I don't know, but again, that's not to say that they might increase year on year, but because we are entering a recession, it's hard to know. Let's go down to ownership. Someone bought 50,000 shares in it, valued, when did they buy that? Less than 3 months ago, so they must have got it for max price £1.3p. So Paul McDonald, he knew what he was doing. He was just like 50,000 shares. He's probably down about 20% on those, but he's probably in for the long haul. Institutions don't actually earn or own as much as individual insiders for this one. Let's see. Who's that? The chief executive officer actually owns nearly 40 million shares. Woo, that's mad. Supreme 88 Limited owns that, and then there are a few others. BlackRock sits down at only 3% in this one. But yes, over to Dividend Max, one of my favourite websites for having a wee look through dividends. Ticker symbol SUP, Supreme PLC. Their dividend went X 17 days ago, which meant they're being paid 3.8 pence per share, and it'll be paid in 12 days. Now, I've completely missed the boat in that one. So the next one I would be hoping for would be March. February, it'll be announced, the interim one, and March will be the ex-dividend date. So you'll need a share in the company before the 1st of March in order to be entitled for the pay date, which is a little over a month later. Now, this company could follow the trend that quite a lot of companies do, which their interim will be smaller than their final. So even though it would maybe look like a cut, overall throughout the year mightn't be too bad. So as you can see, it was forecasted to be about the same dividend, but they actually ended up on it, nearly doubling it. And that led to it being about 78% depending on it. So if you had 100 shares at 80, it's about 80 pence at the moment, 78, 80 pence. Be about £80, you would have got a payment of £3.80 on the 30th of September. Had you had the shares on like the 30th of August, 31st of August. So 30 or 31 days in August. These are questions I shouldn't be asking on stream. You'd think I would know. But yeah, they're paying 2 dividends per year. And again, Supreme will be joining my watch list. My list of, I'm not sure, but I'm going to have an eye on it. It's a very, very attractive price to get in at, but I'm unsure. Everything was coming up great for them except their sort of cash payout. I don't know. I don't tend to dabble too much in companies that pay over that. Everyone sort of might notice that I also have like the likes of Imperial Brands. I think their cash payout's pretty large compared to their earnings. But listen, I digress. Territory I would need to see a few graphs side by side to make a good decision on. But a company that I wanted to show you anyway, because it's a solid company from the way I've looked at it. I see a lot of potential in it. They have a massive amount of they have a massive share in quite a few massively growing industries. I wonder how many times I can use the words massive in that one. But yeah, hopefully you have all enjoyed the video. Let me know what you think in the comment section below. I'm really curious to see if you want more videos on smaller companies that aren't maybe in the FTSE. Because as much as I love looking at dividend aristocrats and kings, and I do love companies that have like a 30, 40 year trend of paying dividends, we've got to see what companies could end up being future dividend aristocrats. We've got to find those gems in the rough. We got obviously the solid players, great for any portfolio, but I always love to throw a few wild ones into the mix, to spice things up. But yes, thank you all for watching. As always, I will see you all in the next episode. Bye-bye.